Taiwan is seeing a cut of around 0.7% as well.
The afternoon downturn was triggered by a warning from the Bank of England that the country's pension funds needed to rebalance by Friday, when the central bank's emergency bond buying program will end.
The company, after a while, has received an order, and this particular order is for close to 145 megawatt.
The company has received approval from Ministry of Corporate Affairs, and that is to demerge NMDC's steel plant.
Infosys president Ravi Kumar S has resigned effective yesterday, which basically means no notice period.
That's the first tick for you. It's quiet actually, but with a bit of a green hue. So the Nifty is up about 35 odd points.
We know that the global economy is going to go into recession in most countries. It's this financial problem which I'm really scared about.
We are seeing this up move coming in for Marksons is because they will be acquiring Teva Pharma's Indian manufacturing facility.
We all stay committed, both from family as well as from the management, to deliver on the plans which we have charted out.
Where consumer price inflation is seen touching a 5-month high of 7.32% for September, as per our poll.
We don't expect the CPI to come below the 6% level before February at least.
Growth priorities will be kept absolutely on the top.
A 54-point uptick on the Nifty.
Well, that was the day so far. Hello and welcome to a fresh new edition of Closing Bell. I'm Prashant. With me, my colleagues Reema and Sonia. Sonia, of course, is joining us from the newsroom floor. Guys, hi, good afternoon. We're having a reasonably okay day. Sonia, in line with the green. We've got a green screen and at about, what, 17,100 at this point in time. I mean, just a couple of points. We basically, the low today and yesterday is pretty much the same, which is 16,000, which stands at, let me just tell you, the low is 16,950. That is the low. It was, I mean, 10-point difference between yesterday and today. But we've only recouped half of yesterday's losses. I mean, that was the size of the extent of the sell-off that we had in trade. But even with this nice 100-point move up, we are outperforming the rest of Asian markets, most of the Asian markets, except China. But China came out of a holiday, so they've got some catching up to do. FMCG, private and PSU banks are doing very well. Those are the top gainers. And the IT index, after, what was a pretty dramatic move lower, is up about 0.5% again. I mean, I think there is maximum debate around this one with Wipro and HCL Tech, which report later today. It's possible, and many are veering around to the view that maybe, just maybe, we will see a relief move in the US, a relief rally in the US. You need a trigger for that, and the trigger could be in the form of CPI. Although, to be sure, if you look at consensus expectations, most expect the CPI to overshoot it, to be very strong because of, the rent component in the US. This is monthly CPI data. But if you are looking for a trigger, there's no bigger and better than the CPI number, which we will get during US market session tomorrow. But, it does. There's extreme pessimism, especially in global markets. Here, the market's been doing well, outperforming, falling less, rising more. But will we get a kicker from global markets on the upside, which can kind of excite bulls here? That remains to be seen. And for that, the pivotal data point is the CPI number tomorrow. Reema, hi.
Hi, and that's going to shape the expectations of all global investors, economists into the November meeting. So the US CPI is going to be very crucial. But now that we're trading above the 200-day moving average, I guess we're back in the range, right, Prashant? The fear was that, when we opened close to those levels, or we went close to those levels yesterday, if we breached it and went lower, then perhaps it's opened the door for much lower levels. Maybe the Nifty was going to go down to 16,500. But now that we've clawed well above our 200-day moving average, which is just shy of that 17,000 mark, I guess we're still back in the range today. There is FMCG, which is firing for the bulls. So names like HUL, Tata Consumer, even Dabur from the mid-cap space. That's the pocket where you are seeing a lot of buying. The Nifty FMCG index, Sonia, is up close to about 1.5%.
Okay, since we're talking stocks, and Prashant, it started off as a lark, right? Wearing green today. And then look where it took us.
The lucky charm.
Sonia, I have my notes and pen ready, so I'm now tracking this systematically. We'll have a time series by the end of the year.
I hope it works, by the way. It's worked today, but, luck is not always on your side. But a couple of stocks that I'm looking at this afternoon, right? Reema was talking about FMCG. The biggest Nifty gainer today is Bajaj Auto. We've had a good run for that stock. It's up almost about 3% odd. Earnings are coming up on Friday for Bajaj Auto, and you have a good pickup in margins on a quarter-on-quarter basis. There'll definitely be a recovery over there. 70 basis points improvement is what the street is estimating. Apart from that, you have HDFC Bank's earnings on Saturday, so all eyes will be on that. Banking, in fact, has done pretty well. So if you look at the month-to-date rally, since the start of this month, Axis Bank has been your top gainer, up about 10% and it has Coal India for Company. So these are the two big movers in October so far. Apart from that, one pocket that I'm watching very closely is mid-cap IT, because today we've seen stocks like KPIT Tech rally about 3%. But even in this month, right, you've had names like Persistent Systems, which has gained about 11%. So the dips are definitely getting bought in the mid-cap space. There's earnings coming up from Tata Elxsi on the 14th of October. So, of course, Tata Elxsi for now is down, but let's see in anticipation of earnings what happens. So these are a couple of spaces that we're looking at this afternoon. For now, the Nifty is holding up really firm. In fact, up almost 135 points on the Nifty. And the sensex up 460 odd points. Let's tell you what's lined up on the show in the next 1 hour. The key indices are off the day's highs, but still managed to stay in the green. Not much action in the broader markets after 2 days of underperformance. Sectorally, banks and FMCG stocks stand tall in trade today. An interesting lineup of guests coming up on Closing Bell today. Dinshaw Irani of Helios Capital will be joining in to help us break down the volatile movements in the market. And Jeff Chaudhary, the partner at Concept Ventures, will also be joining us to take the discussion forward on the global equities and the key triggers for the market going forward. And in earnings expected, a couple of mid-cap IT stocks in focus, Mindtree and Cyient, will be reporting their numbers tomorrow. We'll line up key expectations for you later on the show.
Well, how should you position yourself in the last hour of trade then? Mitesh is with us to tell us exactly that. Mitesh, hi. So at about 17,116, in the middle of the intraday range yesterday, can you say anything with any surety? It's been so volatile, right?
So Prashant, I think today morning I suggested that, yesterday we were trading below the 200-day average, but the last 30-minute closing was bang there on the 200-day average, just about 1.5-2 points lower. And I said, therefore, yesterday's low becomes the reference point. So if you want to go short, I think aggressively, it should happen only once you break yesterday's low. We didn't do that today, managed to hold that by about 10-12 points. So I think in the sense 16,950, 16,980 zone on the downside is holding out at least for the time being, and on the upside 17,280, 300 remains the resistance area. So not shorting aggressively. In fact, on the stock side, we have taken some long positions on a couple of IT names as well as a couple of banking names. So I think, till we break 16,950, I think we'll trade with mild positive bias, though I think you have to be nimble as a trader and take profits as we get closer to about 17,280 odd levels. Having said that, the calls for the day are buy on Federal Bank, and that's holding out very well in this market. It's a buy with a stop just below about levels of 122.5 for targets of 132. And similarly, City Union Bank is another one on the buy list. That's given a good price and volume action. That's a buy with a stop at 180 for targets of 193.
Okay, Mitesh, thank you very much for that. Dipan Mehta, Director at Elixir Equities, is joining in now. Dipan, any thoughts on IDFC? Up 4.5% today, very large volumes. It's been a big outperformer of late. This month itself, the stock has rallied close to about 15%. What have you made of the price action? There is a lot of expectation about, the corporate structure changing, etc. Is this attractive at current levels?
Good afternoon, Rima, and thanks for having me on your show. I think it's a play on IDFC First Bank, since the major asset in IDFC is the holding which it has in IDFC First Bank. And as you said, they're going to simplify the structure, and some sort of a proposal is expected whereby IDFC shareholders eventually get some stake back in IDFC First Bank. And since IDFC First Bank has rallied the way it has, post the kind of Q1 or the Q2 earnings commentary or pre-earnings commentary which came, I think we are seeing good interest coming into IDFC as well. Maybe I suspect that IDFC is trading at a slight discount to IDFC First Bank when eventually it will get merged. So there could be a bit of an arbitrage opportunity over there, which is why I think investors are getting into IDFC so as to eventually own shares of IDFC First Bank, which has been a stellar performer over the past 2-3 quarters also.
Okay, since we're talking about banks, it would be very helpful to pull up the chart of Axis Bank. Not only is the stock up 2.5% today, but it's up about almost about 20% this year. So from the lows of, this is today's chart, but if you pull up a one-year chart, you'll see that from the lows of 600 in June, the stock has had a really steady run up until 805 now. Dipan, good afternoon. my colleague Abhishek put out a note on the banking numbers, and Axis Bank seems like it's going to do the best of the lot between ICICI, HDFC and Axis. Would you buy this stock ahead of the earnings this season?
Yeah, good afternoon, Sonia. Absolutely. I think the best trading bet is to buy all these banks before the earnings. It's going to be a golden quarter for the entire banking industry. The NPA costs are going to be at, I would say, multi-quarter or multi-year lows. And we are seeing good pickup in credit. So you'll see higher net interest income. And generally, the fee-based income also should do very well. And overall, I think bonds have been pretty much stable. So I don't think you can expect much of a hit over there. So it's going to be a great earnings season for the banks. And based on what Axis Bank has reported, I think it should come out with a stellar set of numbers. So positive on all these banks, Axis Bank included. I think it's a good trading opportunity. Even from a long-term perspective, the top 4-5 private sector banks seem to be getting into the mode where they can give compounded earnings for the next 2-3 years or so.
Thoughts on Z, Deepan? Good afternoon.
Yeah, Prashant, good afternoon.
Any thoughts on Z? It did say a bit of a gap down earlier. Big move, it's come up. It's just about 1.33% lower. Lots of chatter around this one, and maybe we can talk about this with Nimish a little later. But any thoughts fundamentally from here for Z?
See, I think if the company gets merged with Sony, then automatically investors will pay a higher price to earnings multiple. There was a major disappointment after the Q1 numbers. Hopefully, it will get corrected in Q2, Q3 because advertising would have picked up and subscription revenues also should do better. But the real kicker in Z is whether the P multiple expands post-merger. And I think it will. So to that extent, investors can expect a decent return from Z. But there are a lot of risk factors in the industry per se and the business model of the combined entity, given the disruption taking place in the media industry. But nonetheless, I think downside is pretty much limited, I would say, in Z at this point of time. And upsides are good because if the merger goes through, then automatically you're looking at an MNC, so-called MNC media company, and there's always a lot of fancy around the MNC tag whenever a company gets converted to an MNC. We expect improvement in corporate governance standards, and that can be expected in this case as well.
Deepan, open-ended question, but we've seen some very heavy rains in October across India. There's been this lingering monsoon. Is this going to have any impact on fertilizer names or any companies in agriculture, any listed impact as you would see it?
Not really. I think the season for the fertilizer companies is over and done with. And actually, a lot of regulation and reforms have taken place in the fertilizer industry on the subsidy allocation and the subsidy disbursement, which to an extent has got unnoticed. I mean, we hardly cover fertilizers anywhere. It's not on the radar of many investors as well. But these are great companies and they've been performing well last several quarters or so. Of course, there are volatility in earnings. Valuation-wise, very attractive, decent return on equity, and gradually expanding their capacity. And as such, I think pretty decent entry barriers as well. So I would be intuitively quite positive on fertilizer companies. Go for the larger ones, Coromandel, Chambal. I think they look quite interesting. Both of these companies are trying to move up the value chain by getting into crop protection as well. And as and when that proportion of the revenue goes up, you could expect higher operating profit margins as well. So I think that fertilizer also could do well over the next 2-3 quarters or even longer than that. And hopefully, I think, this monsoon does not have much, this excess rain which we have seen post-monsoon will not have much of an impact on their revenues and profitability.
Okay, well, the other space that has been moving around and we addressed earlier was mid-cap IT. So KPIT Technologies is having a very good run this afternoon. It's up almost about 3% or so. Persistent Systems is up only 1% today, but this month has had a really smooth run. I mean, from the lows this month, Persistent Systems is up almost about 10% or so. The chart should come up for you. Okay, that's a 6.5% rally this month. And then you have, of course, names like Mindtree and Cyient that report their numbers tomorrow. Deepan, this is a space that you tracked, you loved, but now you're a bit cautious on. If you had to pick any stock that you would buy into now, which one would it be?
Sonia, IT has to be played to the mid-cap route only. We are seeing consistently that the large-cap IT companies are growing at growth rates lower than the mid-cap IT companies. And that trend may continue for many quarters or even many years as well. So I'm a great fan of mid-cap IT. We've seen decent amount of correction over there. I know that it is on the expensive side. It trades at a premium to the likes of Infosys, TCS, but I would say those multiples are justified because a lot of these IT companies, mid-cap ones, are focusing on select verticals or select IPs, and they've got very good connects with clients, which is why they're able to grow the business pretty much well. And even mid-sized projects coming through to them can make a huge difference in their earnings. So we're very positive. Usual disclosure that we and our clients are invested. We like companies like Tata Elxsi, Persistent, KPIT, Intellect Design, Happiest Minds. I think the underlying trend in all of them is that they have something different as compared to some of the other run-of-the-mill IT companies.
You know, Deepan, appreciate you joining in with those thoughts. As always, it's a pleasure. Thanks indeed. You know, Mazgaon Dock is having quite a session. It was so yesterday that rally in Mazgaon was interrupted with a 7-8% cut, but it's back on the gaining streak once again, pretty much gaining back all of what it lost. Power Grid is another one which is up about 3.5%. We've not spoken about that for a while, but that is doing well. And of course, we discussed the IDFC twins, IDFC Limited at 76 now. I mean, almost 5% gainers. Mid-cap tech is a space Sonia alluded to right now. So there's enough and more mid-cap action, which I think is pretty heartening to see. Amber is up about 3% as well. Gold finance companies, I mean, actually, it's not Muthoot, but Manappuram, which is doing well. Manappuram is up about, what, 4%. Some of the sort of worst performers this year so far. The big one, of course, is Muthoot, but Manappuram is up about 4%. We'll take a break. We are back with Dinshaw Irani of Helios Capital, who will help us break down what he's been doing and how he's approaching things in these very volatile times. Back with that conversation in just 2.
Welcome back. You're still tuned in to Closing Bell on CNBC-TV18. We're tracking the last 1 hour of trade, and there are several pockets that are doing well. The pocket that stands out right now is real estate. Brigade Enterprises is up almost about 5% but the others are not too far behind. So whether it's DLF, Oberoi Realty, Macrotech developers, Lodha, Godrej are all in the green. In fact, Oberoi Realty comes out with its earnings as well on 14th. That's on Friday. So ahead of that, the street is quite excited. Dinshaw Irani, the Chief Investment Officer at Helios, joins us now to talk about this and other topics. Dinshaw, thanks a lot for joining in. Since we're talking about real estate, right? I mean, DLF is in focus. I understand that its recent project in Gurugram sold all their 300 luxury homes in one shot for over 1,800 crores. That's the kind of momentum that we're seeing in this market, in the real estate space. Are you just buying stocks or are you also buying homes?
So that's a good question, Sonia. Thank you for having me on your show, and a good afternoon to your viewers and your team as well. But the fact is that, Sonia, you've seen what's happening globally, right? I mean, the Hang Seng has touched levels of 2009, last seen in 2009. Nasdaq is at 2-year lows. S&P is almost 2-year lows as such. So it's obvious that India has been an island in a sea of red, and rightly so also to an extent, because given the inherent strength of our country, I mean, the fact that we're going to be the fastest growing economy for the next 3-4 years as such, driven by consumption, domestic consumption and outsourcing. And secondly, don't forget our base of investors. I mean, the DIs have more than absorbed the kind of selling that the FIs have put onto India as such. So that has helped us to outperform to a great extent various markets and region in particular itself. But that also has made us more expensive vis-a-vis the region, right? Because the region has corrected and we haven't as such. So it's becoming a stretch. And that, I mean, that is what our worry is, that you can only swim to that extent against the tide. Ultimately, you will also go with the flow. So for our markets to continue to perform handsomely, I think the region or probably the developed markets have to even out to an extent, which today doesn't look that good a picture. I mean, we basically looking at probably this quarter or the next quarter things becoming more clearer as compared to the DMs, how they manage this kind of inflation and how they pan out on the recession front as such. The base case today is a limited recession. And beyond that, I'm sure there'll be a problem with all markets put together, India included as such. So the next 2 quarters are very crucial. Our call is that more or less the markets will even out of this on this basis. I mean, there'll be probably a time correction going forward, and you'll see some ups and downs, but mainly it'll be in a band that we'll be working in. So we'll be working with that scenario today, Sonia.
Dinshaw, hi, afternoon. Prashant here. In terms of, so we got the mutual fund flow number, right, for last month. The SIP figures are steady. They even rose a little bit as compared to the prior month.
True.
There were a lot of NFOs, etc. But what you basically describe as ex-NFO, ex-SIP, I mean, if you want to take a look at that number, that is the discretionary flow, that has been negative for more than a few months. What are you seeing? Is money still coming in into equity products? And yeah, go on then, Dinshaw.
Yeah, so Prashant, basically, I mean, looking at the flows that we are seeing today, I mean, I'm talking about Helios in particular. We run a PMS and an AIF. AIF is always a close-end product. But the PMS, we see regular flows, inflows coming in. Yeah. But again, I mean, I'm sure this is mainly, I mean, you talked about the September numbers. In fact, a mild correction in September saw the figures for mutual funds just shoot up by 2,000, 3,000 odd crores in that particular month. So the retail participation has been very good. But as gatekeepers to their investments, we have to be very clear that we have to be a bit more cautious to that extent. So what we are telling our investors is that though you want to invest, but we want to stagger it for you. So we put it in a STP kind of a product and we're evening that out. So I think that basically India hasn't seen a big correction, right? So I think the new investors who are coming in, they've seen only upsides from here or a flattish market. But we got to educate them, and that's why we believe that it's better to be cautious today, probably stagger your investments over a period of time than be aggressive. So flows haven't been impacted to that extent, I believe.
That's interesting. So you're holding more cash and kind of staggering it out as you get it to match that view that you know, eventually the direction will be the same. The intensity may be different.
So basically for India to grow, I think the world has to even out, right? The world has to flatten out. If they keep falling like this on a daily basis, ultimately India will also be correcting to that extent, because you can't have too much of a runaway gap in your valuation vis-a-vis the global markets.
So you can swim against the time only for a limited amount of time and for a limited distance. And Dinshaw, just to add to that point, you know, MSCI India's valuation premium over MSCI emerging market historically used to be about 60-65%. Now, given the underperformance of MSCI emerging markets vis-a-vis India, because most of those markets are down 25-30% on a year-to-date basis, that premium of MSCI India versus over MSCI emerging market is now shot up to 140%. And just to add to the point that, you know, you were talking about how long can that sustain. But, you know, one place where investors have sought shelter has been banking. And the numbers are also looking good. The business updates for most of the banking, you know, for most of the banking names that have come out so far indicate that the loan growth is going to pick up 4 to 8% on a quarter-on-quarter basis. But, you know, everyone's expecting blockbuster numbers, and in a way, then it gets priced in. So what's the scope for an outperformance of banks from here on?
So, Rima, good question as such, because we are also very bullish on that particular sector. So what we did was that in order to insulate ourselves from the global events that are happening, we went very, I mean, in fact, we sold off the whole of IT to that extent. And that's around 13-14% of the portfolio. In August itself, we sold it off and we said we don't want to be in any sector which is external facing and may get impacted by the recession in DMs and such. So that's what we did. And where did we deploy that money? Because we didn't want to keep that much cash lying with us. So we started deploying it in private sector banks and NBFCs to that extent. But mainly the call here was that we are looking at interest rates moving up, right? I mean, that's a given. In fact, US, which was supposed to end the year at something like 3 odd, rather when they started off, it was 2.25%. and today they're talking about almost 4.25% as ending the year at, right? So given that fact, given that background, we are also very clear that in a rising interest rate scenario, is the consumer-facing banks which really prosper, because the NIMs start expanding to that extent. I mean, they do not, the borrowing cost moves up gradually, but the lending cost straight away shoots up, right? So that's why the NIMs expand. And that's where we've been investing. And frankly, as I said in the beginning, if you're talking about a consumption-driven economy, it has to be driven by banks which are consumer-facing banks, which is going to fund that consumption. So that's what our call has been. Apart from that, we also got into what we identified way back in April as such a theme which we called as affordable luxury, or rather mass luxury segment. I think that's another theme where we're adding to our positions as such, and that's also played out to that extent.
Okay, we do know your view, at least your house view on the auto sector. I mean, we've spoken to Samir at length, and he's always told us that he's not very bullish. He believes, you know, the end of this year will be less than sales last year. But things are changing, right, Dinsha? I mean, there's so much disruption happening here. Players like M&M are now leading from the front. There's so much happening in the two-wheeler space. At any point, would you change your view on the auto sector? Would you look to buy any stocks?
So Sonia, I mean, it's akin to what telecom went through earlier. I mean, I'm talking about in 2013-14 when Reliance Jio came into play, right? So there won't be any winners, frankly. I mean, when EV space comes, so right now they're all earning out of the fact that you know, the commodity prices have come off. There's a pent-up demand. The Diwali sales has been fairly good, and the festive season sales are supposed to be good, right? But look at the longer trend. What are we talking about in the future? We're talking about a huge disruption happening here. I mean, I remember coming to your channel probably a year back and saying that the world has anointed Elon Musk as the next disruptor, which became the richest person in the world. And that you've seen what the earlier disruptors were like. I mean, who were the richest people there. So basically, the EV space is going to be a disruptive space. There won't be any winners in this space, because look at the kind of capexes we're talking about, and then compare the capexes that our homegrown companies are talking about. It's nothing as compared to what they're saying. So it's gonna be a pretty messy space going forward. So that's why we're avoiding this. You already seen it in the two-wheeler space. EVs have created quite a disruption. In fact, the festive season has been fairly dull for the two-wheeler space. So it's better to be away from an industry which is going to be disrupted in the future and stay away. And probably you'll, as we tell our investors, that there's enough fish in the pond for us to fish. You don't have to be in something which is moving for a momentum as such right now.
Hilsa, Pomfrey, Surmai.
I'm getting hungry.
Dinsha, so name a few fish for us. I mean, anything new which has fallen into your net? I mean,
I like Atlantic salmon, by the way. So.
I think they're taxing salmon fishing quite aggressively now. I read somewhere that that it's going to be tougher to find them.
Yeah, that could be lucrative. But anyway, so what we did, Prashant, was we added a few new names to our portfolio, mainly in the mid-cap banking, private sector banking space. And they were mainly companies which were, one was a regional focus private sector bank, which is into micro lending as such, and the other one is fairly aggressive. I mean, it's not a new name, but it's been around for a while, but still has done fairly well, even in the upheaval of its times, and that corrected to that extent because of the problems that we're seeing. And we added those two names, and that's about it in that space. So.
Indocent, Dinsha?
Sorry?
One of them, Indocent?
Indocent was added much earlier. Okay. It was added much earlier, but there are two other new names which you added. But I won't tell you.
So in this affordable mass luxury theme, which you've identified in April, some of the names which you've spoken about in the past include Vedant Fashion, Westlife, PVR, Campus Active Footwear. Any other new names in this theme?
Not really, Rima, because there's been a dearth of names in this space. So we've been adding to this particular. So basically, I think Titan is one more name which is there in that space, which has done fairly well as such for us. So we added to that name too in the past. But apart from that, there's not many names that we can put about here.
Luxury is doing just fine, by the way, Rima.
Yeah.
I was Louis Vuitton CEO. They just reported numbers. They said they reported, by the way, super strong numbers, right? Because I mean, it was the quarter when Americans could step out for the first time, travel to Europe, stronger dollar. So
and it's cheaper for them, right? The minute a US American goes to Europe and he goes to France and he buys an LV, it's much cheaper. He's getting a straightaway discount of 10-15% based on the depreciation.
But the CEO said luxury is not a proxy for the overall economy. So I found it interesting. But luxury is what is doing well around the world, and I think we've discussed that many times here. Sonia, you want to make a point?
You know, I was talking about it earlier, right? When I asked Dinshaw if he's buying homes. I mean, DLF, India Panchkula Property, sold all their luxury homes, 293 homes, for a sum of 1,800 crores. You're talking about a Louis Vuitton bag. It doesn't cut it. I mean, people are buying 20-30 crore homes just like it's, you know, buying vegetables.
But you know, at some point, I guess the COVID-related savings will run out, right? I mean, we've seen this big surge in buying in the last 2 years because a lot of people didn't get to spend it in 2020, 2021. But at some point, it's going to run out. And there was some survey I read very recently, perhaps in the last 2 weeks or something, which said that for the first time, household savings has dropped to what it compared to pre-COVID levels, right?
No, savings have dropped.
At some point, it's got to stop, right?
You know, I put that to Pavitra Shankar of Brigade, who was with us. Everyone was locked in for 2 years. And so she said, well, what has happened is that people's outlook on life has changed, right? What is important, how much space you need. People have had time to reflect on those things. So maybe the momentum fizzles out a little bit, but the runway for growth for housing, etc., is quite long.
All companies are calling their employees back to office. There was a headline in the paper yesterday or today saying that if you want to work from home, show us a medical certificate.
But why do you want to work from home?
I'm not saying that. I'm just saying that.
If I may add to that argument.
Go on then, sure.
Yeah. So I recently read that, brands like Rolex or Patek Philippe or Audemars Piguet, they run out of stocks.
Yeah.
Okay? So that's the kind of talk we're talking about. And secondly, it stands to the argument that can be in favor also is that the concentration of wealth has increased quite a bit as compared to in the past, right? So another argument that we have come across is that this time around, the US may not have to increase the interest rates that much to start impacting the demand because the bulk of the households are already feeling that pinch to that extent because, as I said, the savings are concentrated in the hands of a few, right? So that if that plays out, that's why our base case argument here is going to be that only that we to looking at a limited kind of a recession in the US and then probably things will start evening out. That's why the next 2 quarters are fairly crucial.
No, absolutely. Then sure, it's something which needs to be watched carefully. Thanks very much for joining us, Dinshaw. Appreciate you joining in with that perspective today. 130 points, by the way, on the index. 17,113 is where we are at. We'll take that quick commercial break. We're back with what is happening in dealing rooms. Nimesh joins in for that. D Street Chatter. And of course, we'll also run you through some trading ideas, BTST calls with our technical expert coming up in just a bit.
Welcome back. Looking good for the markets now. 150 points higher in the Nifty. It's a dramatic pickup that we've seen. There have been 2 instances that the markets have, seen buying. One was around 11 o'clock. Then around 12:30, we saw some amount of profit booking, the rally fizzling out. But again, in the last 1 hour, things have picked up. We're at the high point of the day. The sensex has surged close to about 530 points. It's a good time then to tell you what Dealing Rooms is saying, what the buzz is. Let's welcome Nimesh on D Street Chatter. Nimesh?
Hi, Rima. So, a surprising second half move in the Indian markets. And actually, that's been a bit surprise as well because no one was expecting this kind of an up move and it's been there. So that's the kind of volatility which is there in the Indian markets and that is likely to continue this week. That's the overall feedback. Still, the Nifty is, swinging between 16,900 and 17,100. That seems to be the range in today's trade. Unlike yesterday, what I understand is the flows are slightly muted from the large institutions. So today's up move is not backed by very large FI or DI buying or selling, so to speak. So it's been a muted day. I guess a lot of global macro events are something to watch out for as far as the global events are concerned, and that's only going to add to the volatility. However, there are a lot of earnings to react to in Indian markets, so that's going to be a center stage. We have a few large IT companies reporting numbers on Saturday. HDFC Bank and Avenue Supermart will report. So it's going to be a busy earnings week, so that's going to have an impact on many individual stocks. But today, for a change, the volumes are on the lower side from the larger institutions, so not big participation. And it looks like because of the global events, we're going to see a lot of volatility for the next couple of days.
Nimesh, thanks for that. That's an overall check. In terms of specific stocks, though, that's always an interesting list. What are you picking up?
Hi, Prashant. So the first stock on my list today is Zee Entertainment. A lot of chatter across dealing rooms, and it looks like everybody seems to know what's going to come in Zee very soon. So there is a lot of anticipation of a large block deal coming soon in Zee Entertainment. Of course, everybody is speculating to the fact that the leading FII who has a residual stake now is likely to sell out. So that's been a big buzz on Zee Entertainment. So that's the first one. The second stock is Power Grid. The PSU power stocks are back in focus of late, and today Power Grid is buzzing largely on back of very strong buy flows from some large FII desks. So there is a bit of buying back in the PSU power stocks, and Power Grid is buzzing on that. So that's the second one. The third stock is Zomato. Again, the stock has been consolidating in this range between 65 and 70, and now there is a strong buzz of a large block deal in Zomato as well. Again, a strategic investor is a potential seller in Zomato. That's a big buzz as far as Zomato is concerned. And the last stock is City Union Bank. All the small private banks are buzzing in trade today, whether it's IDFC Twins, City Union, Federal Bank, all are buzzing, and City Union Bank is buzzing purely on buy flows at leading FII. So the volumes are going to be quite high in City Union Bank today.
Okay, thanks a lot, Nimesh, for that. So that's on City Union Bank. In fact, for now, the market has really picked up pace. We were telling you about some of these names: Manappuram Finance, L&T Finance, M&M Finance. A whole lot of NBFCs have been looking very good. Mitesh Thakkar is with us. He's back again. Mitesh, at the start of the show, you told us that financials is the place to be, and it's turning out like that. Tell us, what should one buy today to sell tomorrow?
So, in fact, I have two more financial names on the list. IDFC Limited as a BTSC could be a good trade. It's trading at the day's high, good price and volume action. Of course, the candlestick is very powerful. You've discussed the stock. So take a stop around 75.40 and a target of around 78.5 for tomorrow. And the other one is Indiabulls Housing Finance. I think that's another stock, which typically I don't cover, but I think the intraday charts are quite positive here. So a BTST here with a stop just below 128 and a target of around 134 for tomorrow.
Okay, Mitesh, thank you very much for that. That's some trades coming your way. Well, the market's doing even better, 150 odd points higher. 17,131 is where we are at right now. Now, Jeff Chaudhary of Concept Ventures is joining us right now, the biggest pre-seed venture fund in the UK. Jeff, great to have you with us here. Thank you very much for your time. I just want to outline some recent events with regards to what's happening in the UK quickly, and then I'll come to you for a quick reaction, right? Because it's been absolutely, I don't know if you've been tracking what's happening, but it's been crazy. So the story is this, that the Bank of England on Monday, which is this Monday, said that their bond buying program, basically intervention in bond markets, will end this Friday. Yesterday, in a public speech, the Bank of England governor reiterated that is the case. The intervention will end this Friday. This morning, the Financial Times put out a story citing sources that the Bank of England governor had told bankers privately that, if the conditions so warrant, they could extend the bond buying program beyond Friday. 2 hours later, the Financial Times puts out a story that an updated story saying that, the governor told this to bankers before his Tuesday speech, in which he said that the program will end on Friday. And then we have a spokesperson of the Bank of England, Bloomberg, saying that the program will indeed end this Friday. Why is this so important? It's important simply because bond markets in the UK are having a domino effect around the world. We've seen treasuries move, we've seen money going into the dollar, and we've seen equities reacting to what's happening there. Jeff, how do you read this, and what is your interpretation? How important is this for global markets? Global risk on and risk off. Go on.
Right. So thanks very much for having me on the show. I appreciate you being here. Let me give you 10 seconds of background. I'll give you some context. the sort of the core issue is something called, which is a sort of a corner of the UK pensions market called liability-driven investment. I won't bore your viewers with the technicalities of it, but essentially what it means is that the pension funds in the UK essentially have to use derivatives in order to basically to match the liabilities of the pension funds. The problem is because interest rates have gone up very quickly, they have had to sell these derivatives in order to maintain the exposure to this liability-driven investments. The result of which is the Bank of England stepped in last week and essentially bought the bonds of the pension funds in order to stop the bond market essentially from collapsing and ultimately for the pension funds to stop collapsing. Now, you mentioned at your opening about will they continue with the bond buying, will they not continue with the bond buying? The role of a central bank, whether it's the Reserve Bank of India, the Bank of England, or the Federal Reserve, is ultimately financial security and, importantly, for the system as a whole. So if the Bank of England feels that this is a systematic risk to the banking system, then I'm sure they will continue with their bond purchases. Whatever statements you've seen in the press or whatever, they will continue with that process. Now, why is this important on a global basis? Well, on a global basis, if the Bank of England continues to buy gilts, that clearly pushes up yields, and that clearly has an effect on other bond markets around the world. So that, in a nutshell, is what the issue is, and I suspect volatility will definitely continue over the next few weeks.
Okay, so Bank of England being pulled in opposite directions, one by the requirements of the market, the pension fund, and the other by the economic data. But Jeff, just to get your views in on the global markets, you know, investors are just wary. They're tired of guessing which way, what's going to happen with respect to inflation, how many more rate hikes. And we've seen this very scary sell-off take place in the global market. You know, the debate keeps coming up, right? Is the Fed going to pivot, or is it time to stop guessing about when the Fed is going to pivot? Your take on what's happening and what are the implications for an investor out here in India?
I think there's a couple of implications. I think, you know, people talk obviously very, very short term about, you know, interest rates going up this year and the market being weak. This whole started in 2008. I know it's a long, long time ago. 14 years is a very, very long time. But the situation that we find ourselves in today is a result of the very aggressive quantitative easing which took place after the financial crisis. So we basically had 15 years of very, very easy money, low interest rates, consumers and institutions to some extent are in high levels of debt. And with interest rates going up, that's going to cause financial pain. So I'm not going to predict when the Fed is going to stop increasing interest rates, but it ain't going to be soon. I think the reality is inflation is going up, and the economies are in such a position that, you know, that rates have to go up across the world. And on top of that, you've got things like the Bank of England issue with the pension funds in the UK.
Okay, well, for now at least, despite there being an overarching cautionary situation, our own markets have been very resilient. Jeff, good afternoon. Is there a case now for a bigger bear market in the US, the ferocity of which could be perhaps more severe than what we've seen in the recent past?
Well, the S&P 500 has corrected by about 25% so far this year, which is a fairly significant correction. I think at this point in time, I think the market will continue to remain under pressure. You know, I don't like forecasting levels for the market, etc., but I think it will continue to be under pressure, and although we have seen quite a lot of pressure so far. But remember, and again, this is what I like to say to sort of my mentors and my students that I teach in this area, the ultimate barometer of investment is the US 10-year Treasury. That is a thing that everything comes from. And with interest rates going up and the 10-year yield going up, that's a very, very difficult environment, particularly for equities and also for bonds.
Okay, and no peak anywhere inside there, right?
I don't think so. I don't think so. I think at the moment the Fed is sort of trying to catch up with expectations as far as inflation is concerned. Obviously, you've got some inflation numbers coming out later on today. I think when the market realizes the Fed is ahead of the curve, that's probably the time to be dipping your toe in the water, both in terms of the bond and the equity markets. And as I say, the UK has its own problems.
Okay, fair enough. Jeff, any thoughts on what's happening with China? We have later this week, that is on Sunday, the 20th Party Conference in China. And the big issue for markets, which is relevant immediately, is the zero COVID policy, right? Which doesn't look like it's going to go anytime soon, at least not this year, maybe next year, is what the general expectation is. How important is that?
It's very important. I mean, by any measure, as everyone knows, COVID started in China, and so they are now neurotic about it more than perhaps any other country in the world. The zero COVID policy is a policy which obviously they're enacting because they're worried about what's happened, but more importantly, has a very, very severe impact on economic growth, both in China and the rest of the world. So this is not good news either for China or indeed for economic growth more globally in terms of the zero COVID policy.
Jeff, thank you very much for joining in today. Pleasure speaking with you. It's time to slip into a very short break. We'll come back and discuss more on the market. 10 minutes to go. Welcome back. Wipro is moving up. Reports numbers should come out closer to 4 o'clock. And ahead of that, Wipro is seen buying. It's currently up close to about 4%. Two key things to track when it comes to Wipro. One, the margin expansion or the margin recovery trajectory over the medium term. So there won't be much margin recovery this quarter because there is a residual impact of the wage hike. But how do the margins get back to the company's guided band of 17 to 17.5% from the current 15%? That's going to be crucial. And the second thing will be their outlook or the revenue guidance for Q3, because the macros are very volatile and Wipro is the only one which will give you a near-term outlook. Infi, TCS, Infi has an annual guidance. TCS doesn't give you numbers. So Wipro is the only one where you can gauge the near-term revenue as well as demand picture with its Q3 guidance. HCL Tech is the other one. The stock still continuing to hold on to its 1.5% rally. Let's invite Sudeep Bandyopadhyay, the group chairman at IndiTrade Capital, with us now. Sudeep, thank you very much for joining in. Any thoughts on Wipro, HCL Tech? Should we expect good numbers based on what TCS had to report?
Good afternoon. Well, I think, the way things are, we expect the numbers will be probably better than what we all are anticipating and what market is expecting. Yes, there will be a tail effect of the wage hike, which we will see in Wipro numbers. But overall, we are expecting a better margin performance as far as Wipro is concerned. HCL Tech, I think last few quarters have been pretty disappointing. And, the whole market, including us, have been waiting for the turnaround as far as HCL Tech numbers are concerned. We expect that to start from probably this quarter itself when they announce the results. And yes, absolutely right that near-term guidance given by Wipro will be a very good indication as to what's in store for them in the next few quarters. Overall, we are bullish as far as IT is concerned on medium to long term. Short term, there is volatility ahead, and we have to be a bit cautious.
Okay, we have to be a bit cautious. Sudeep, hi, good afternoon. What about a stock like Tata Elxsi? It comes out with its numbers on Friday, and it had a very strong Q1. It's in a niche space, so may not be as badly affected as its peers, perhaps. Would you buy this ahead of the numbers?
Well, Sonia, I think Tata Elxsi has beaten every kind of estimate, what anybody has put across over the last few quarters. And why quarters? I think last few years, they have performed, better than anybody's expectation. And probably they will continue to perform that way for some time. The only challenge as far as Tata Elxsi is concerned, I'm scared recommending a buy at Tata Elxsi at the kind of valuations at which it still quotes. And I will be a bit cautious, not taking away anything from the quality of management, quality of performance, but I will be a bit cautious as far as buying Tata Elxsi is concerned at these levels.
Sudeep, do you track Garden Reach Shipbuilders? Completely re-rated after the move in Mazgaon.
Well, I think I don't directly track Garden Reach shipboard builders, but I do track Mazgaon. And we believe that overall this industry is going to go through a complete re-rating. And that's pretty much what we have been seeing happening. Also remember, defense make in India gives a big boost as far as these shipyards, shipbuilding companies are concerned. The fresh orders coming from defense and also as far as Mazgaon is concerned, the submarine manufacturing facility, and submarine manufacturing gives them a new stream of revenue. The balance sheets also are to a great extent pretty sound. They don't have the old problems of the borrowings and the other challenges which Garden Reach once upon a time had. So I think if somebody is a long-term investor, whether it's a Garden Reach or a Mazgaon dock, is definitely a good investment.
Sudeep, a short chat today, but thank you very much for that perspective. Great speaking with you. Appreciate your time here on CNBC-TV18. We're going to start wrapping up things because it's now getting 3 minutes to close. By the way, the market will end pretty much at the day's high. 17,142 is the day's high, and we're about 12 points short of it. The low yesterday and today is the same, but we've only managed to recover about 50% of yesterday's losses. The next level to take out is about 17,262, which is still about, 130 odd points away, which is the high yesterday, which is the high day before yesterday as well. And that is a bit of a congestion zone, which the market has kind of struggled with since last week, middle of last week. In terms of sectors and stocks, large cap stocks, banks did well, both PSU and private. Real estate as an index did quite well, and FMCG did okay. So those are spots of green. Large cap names like Power Grid, Coal India, NTPC, old economy, was in action. But names like Axis, Indocent not quite at 1200, but just under that. Bajaj Auto was another one which did just fine. So that's large caps for you. Broader markets almost close to 1:1 in advances to declines. Rima.
Almost, but you still had more stocks ending in the red then compared to the green. The mid-cap index also picked up towards the close of trade. The index higher by close to about 0.5%. Raymond saw a big spurt in the last 10 minutes, stock ending with 13% gains, a 52-week high on that. Defense as a theme was active. Garden Reach, Mazgaon Dock, Cochin Shipyard, all of them active. Lots of interest coming through. Liberty Shoes has been a big mover over the last 3 months. Mid-cap IT led by KPIT Tech saw some gains. You got NBFCs like Manappuram General Finance, M&M Financial Services, L&T Finance, all higher in trade. On the losing side, you had some softness coming through in names like a JK Tyre, Zomato too, down for the second day in a row, Sonia.
It's a list of gainers and losers in the broader market. So we end the session with handsome gains under our belt. The Nifty is up 145 points by the end. The sensex is up over 500 points, and a lot of participation coming in from the Bank Nifty, up about 420 points. Remember, lots of big data coming out from the US as well in terms of the FOMC minutes. You have the inflation data, so lots to reckon with over there. But for now, our markets have seen a big pullback from the lows. The cash market volumes were also pretty high today, not touching 50,000 crores, but at 48,000 crores in terms of cash market volumes. But on that note, we will thank our viewers for joining in and thank our guests for joining in as well. It was a good day for the bulls, and it seems like this traction perhaps could continue if the global markets continue to be supportive. But let's do one thing. Let's take a quick commercial break. Don't go anywhere. Our Wednesday special offering Mad About Markets is coming up in just minutes from now. Keep it with CNBC TV 18.